So BlackRock just dropped the results from one of their strongest quarters ever. We're talking a new record, $13.5 trillion in assets under management. But look, this isn't just about a huge number getting even bigger. What's really interesting here is that this quarter basically gives us a blueprint for the future of investing. So let's break down what that actually means.
Okay, first things first, let's just hit you with the headline number, the one that tells the whole story. $205 billion. Seriously, just let that number sink in for a second.
Yeah, that's how much new money clients poured into BlackRock. And not in a year, but in a single quarter, just the last 3 months. It's a massive vote of confidence from investors all over the globe. So you gotta ask, right? How on earth did they pull this off? And maybe more importantly, what does it tell us about where all of finance is headed next?
To answer that, we've got to zoom out for a second and just see how many records were actually broken here.
I mean, this quarter was just full of major milestones. You've got total assets hitting that new peak of $13.5 trillion. Their famous iShares ETF business, yeah, that just blew past the $5 trillion mark. And even their cash management platform, where clients park their money for liquidity, that crossed $1 trillion too. All of this together powered a 10% organic growth in their base fees. And remember, that's growth from their existing business, not from buying other companies. That's the fastest pace they've seen in over 4 years. Just incredible.
And this wasn't just some one-off surge, As you can see from this chart, their fee growth has been steadily picking up speed over the last year. It went from 5% a year ago to 6%, then 7%, and now it's hit this remarkable 10%. This is a story about building real momentum, not just getting lucky for one quarter.
So, where did all this growth actually come from? Well, it wasn't just one thing. It was this powerful combination of 4 different engines, all firing at the exact same time.
The first and biggest engine, and this probably won't surprise you, was their massive ETF business.
In fact, out of that huge $205 billion total, a record-breaking $153 billion. That's the vast majority poured right into their iShares ETFs. This just goes to show you that their original powerhouse is still the biggest thing driving their growth.
All right, let's talk about the second engine, which is getting more and more important, private markets. Now, this is where people invest in things that aren't traded on a stock exchange, like private companies or big infrastructure projects.
BlackRock pulled in another $13 billion here. This is a clear sign that investors are really looking for returns in these less traditional, long-term investments like private credit and infrastructure.
And that brings us to their newest and, let's be honest, maybe most futuristic engine, digital assets. Yep, we're talking about their crypto-related products, their ETPs, which are basically funds that trade on stock exchanges, just like stocks.
Get this, an incredible $17 billion flowed into their digital asset funds this quarter alone. Their big Bitcoin and Ethereum products, IBIT and Ether, are already in the top 5 fastest-growing ETPs in the entire industry. That is a huge validation of them jumping into this space early.
And finally, you've got the engine that's maybe a little less flashy, but is incredibly powerful. And that's cash management and large-scale outsourcing. That's where huge institutions like pension funds just hire BlackRock to manage their entire portfolio for them.
And this chart right here, this is basically the secret sauce. It shows you exactly where their money comes from. And look, it is not just one thing. Yeah, ETFs are the biggest piece at 42%, but then you have almost 30% from huge institutional clients, another 23% from everyday retail investors, and even 6% from cash. See, it's this incredible diversification that makes their growth so steady and so powerful.
So that's how they grew this quarter. But BlackRock is playing a much, much longer game. A massive part of their strategy is just buying entire companies to go and dominate the markets of the future.
Just look at this recent buying spree. They just closed deals for Global Infrastructure Partners, or GIP, to become a leader in infrastructure. They bought HPS, a giant in private credit, and they even bought Precision, which is a key data provider for private markets. They are strategically buying up the leaders in the exact growth areas we were just talking about: infrastructure, private credit, and the data that powers all of it.
Now, the key here is how they integrate these companies. The CEO, Larry Fink, says they don't operate as a collection of boutiques. What he means is they fully absorb these new businesses into one single platform. The goal is that any client can access everything BlackRock does, seamlessly. Think of it like they're building a unified financial supermarket, not a mall full of separate little shops.
In that unified platform, it's aimed squarely at what they believe is the next huge frontier in finance: tokenization, and totally rethinking retirement.
Okay, first, what on earth is tokenization? Well, the simplest way to think about it is like a digital deed. It's the process of turning a real-world asset like a share in a fund or even ownership of a building into a unique digital token that you can buy and sell instantly on a blockchain.
And BlackRock's vision for this is just incredibly ambitious. They look out and see over $4.5 trillion already sitting in digital wallets around the world. So their plan is to tokenize their own products, like their iShares ETFs, so that one day you could invest in stocks and bonds directly from your crypto wallet without any friction.
At the very same time, they're working to completely overhaul retirement savings. You know, for decades, private market investments were really only for the big pension funds. BlackRock is pushing hard to make those same kinds of investments available inside everyday 401k plans. This could potentially give millions of people access to the kind of higher returns those markets have offered in the past.
All right, so we've looked at their record-breaking quarter, their strategy, their vision for the future. What's the big takeaway from all this? What does it mean for us?
Well, it really comes down to three things. First, BlackRock has evolved. It's not just an asset manager anymore. It's a full-on financial technology and infrastructure company. Second, their core strategy is to completely erase the line between public markets and private markets, offering everything on one giant platform. And third, they are making a massive, massive bet that the next evolution of finance is going to be digital and tokenized.
And that leaves all of us with a pretty fascinating question to think about. In this future that BlackRock is building, what if all of your investments, your stocks, your bonds, your alternatives, your crypto, all of it, could live together and be traded instantly from a single digital wallet? How would that change the way you think about building wealth? It's a big one to chew on.